30%. But all of that in focus, we're also looking at Marico because it's a good performing stock in today's trading session, an outperformer as the net profit and revenue beat street expectations, led by 7% volume growth, which is the highest that we've seen in the FMCG space so far. I spoke with Saugata Gupta, who's the Managing Director and CEO, who has been extended his term by the next couple of years as the MD and CEO until FY28. I asked him about the consumer sentiment and, more importantly, the expectations for the company from this year. Listen in.
I think we have been seeing a significant improvement in rural. I think rural, the demand seems to be good. It's far better than what it was. And I believe if the monsoon is, the overall monsoon forecast seems to be normal. So rural, demand should be okay. We are also seeing inflation cooling down a bit. Urban demand, I think, has been a little patchy in some kind of categories and certain section. It has been doing well. In certain, it has not been doing well. Having said that, I think what we have been talking about is that some of the organized FMCG players have lost share at the top end from some digital brands, at the bottom end from regional or smaller brands, which has become active in an inflationary condition. So I believe that the urban sentiment and the urban consumption will gradually improve, and therefore the volume growths this year should be better than what it was last year. Having said that, yes, there are some input cost pressures in the sector, which has been, I think, impacting bottom lines. But I think one needs to be resilient and manage that.
All right. So I'd like you to get a little more specific, because in your commentary, you've said a couple of things. You aspire for double-digit growth momentum in FY26, and also operating profit would be double-digit. I just wanted to understand what do you imply by double-digit revenue growth? How much of that would be volume-led? How much of that would be pricing-led? And when you are expecting double-digit operating profit growth, do you expect it to be in line with revenue growth, or do you expect some moderation in margins in the second year?
We see it is as follows. I think we have been now delivering, last quarter we delivered 6, this quarter we delivered 7. So therefore it will be important that we maintain this kind of a volume growth track record. Yes, there has been inflation. We have taken around 30% increase in Parachute pricing. There has been some increase in even Saffola pricing, which we have taken sometime last year, second half. When there was an increase in the table, a combination of input costs as well as the import duty. So I think there will be obviously inflation definitely in the first 2-3 quarters. So given the momentum we see in the digital brands and foods, we are extremely confident of food continuing to deliver 25-30% growth. Digital brands a little tad higher than that. So therefore there is we are extremely confident of delivering double-digit revenue growth. As far as the bottom line growth, EBITDA operating margin growth is concerned, operating profit growth, there are two factors. One is I think we believe that the copra prices, which is peaked, and therefore it is going to move down. It will take a tad longer. We had earlier thought of a softening in Q1. We see the softening moving towards Q2. So therefore we will start picking up margins in the second half. The other thing that will happen is, as you know, that we have significantly improved margins in food, digital. 2 of the brands are broken even, and Beardo is near to double-digit EBITDA. So we will push for accelerated growth in these 2 brands. So therefore, and of course, value-added hair oils, which has a higher margin, is expected to grow this time decently well. So all this mix change, plus the fact that the second half we expect copra prices to correct definitely by Q2, and you will get the impact in the second half. We should strive to deliver double-digit operating profit growth this year.
All right. So if I had to break it down, basis what you've said so far, the first half of this year, high single-digit sort of volume growth is a possibility. Second half of this year, volume growth may move towards double-digit, with also margins between 19 to 20%. Would that be a fair estimate?
It's about volume growth moving towards double-digit. I think what we talked about is the revenue growth definitely delivering double-digit. Volume growth, what we are talking about is, I think we have delivered 6 and 7, and therefore we will strive to maintain this kind of a track record. As far as operating margin is is concerned, as I said, that sometimes the percentage depends on the inflation. The numerator and the denominator effect, decides the percentage margin. Especially in high inflation, the percentage looks smaller. But the way to look at it is that I think as our aspiration is to deliver double-digit growth in their operating profit.
All right. What about international? You said that international has done extremely well, double digit, and you expect that double digit to only accelerate going forward. What do you imply by that? What kind of increased run rate do you expect in your international business? And what sort of premium share do you expect? Because that has increased from 20% to 29%. How much does that diversify going forward?
I think international business, we are pretty confident about delivering double-digit constant currency growth. It's difficult at this stage to look at how the individual currencies of the countries will play out. I think Bangladesh has been extremely resilient, and we have been delivering double-digit growth for the last few quarters. I think our entire endeavor is in our key markets, we should be one of the fastest growing companies, as well as aspiring to get what I call top quartile operating margin in each of the markets. I think we have done that in Bangladesh, South Africa. In Middle East, I think growths are high, and we continue to improve our profitability with scale. Vietnam is something which we have to get it back on track. There is some consumption headwinds, and also the fact that some of the categories we are there, penetration is high. So therefore, we have acquired certain brands in the last, and also ventured into some of the brands which are top end in female grooming. So they have to grow at an accelerated pace for Vietnam to get back into double-digit growth. So overall, I think we expect kind of a steady kind of a growth from the international business. As far as the diversification is concerned, I think two things have happened. Our dependence in Bangladesh continues to decline, although Bangladesh growing at double digit, but the dependence going down. And the second thing is that our share of premium business, we expect that business to continue to grow at 20-25%, so that share grows rapidly. That is definitely has a less commodity dependence. It is far more premium and a higher gross margin.
All right. And finally, before we let you go on the diversification, you briefly did touch upon foods and digital brands along with premium personal care. You did say you're expecting food to grow between 25 to 35% this year, with the other parts growing a lot faster. What do you intend to end the next year with when it comes to this overall portfolio, when it comes to revenue run rate and the sort of margins that you're targeting this year?
I think we should be hitting 25% this part of the business by FY27. And I think it's extremely critical that this part of the business grows at 25% to 20 to 25% plus for us to continue this diversification. At the same time, I think as far as the digital brands are concerned, as I said, that the cohort of Beardo and Plix, we expect that to hit 1,000 crore this year. This part of the business is already broken even, and therefore we have to drive accelerated growth. The second part, which is the Just Herbs and True Elements, there is still some bleed, although the bleed is marginal. Our effort will be to, while we grow at a sustainable pace of 20% plus, how do we accelerate the break even over the next 18 to 24 months? Food, I think we want to double in the next 3 years, and therefore at the same time, and food, the interesting thing, we have seen this with our oats and masala oats business, that at a certain level, today it's hit around 400 crore plus. We are almost near to our operating margin of the group, and therefore it is very important that we pick up 1 or 2 categories in food and get it to rapid scale, which will drive profitability.
And finally, any acquisitions on the anvil or any new category expansions?
I think we have enough on our plate, and I think it's important that we continue to grow. Yes, I think the 2 things we have done well. One is the total addressable, the TAM expansion of Saffola, and the diversification international business. And there could be learnings so that we transplant into other countries some of the experiences.
All right, that is Marico, a confident-looking Saugata Gupta who expects a double-digit growth in the next year on both revenue as well as operating profits, with 6 to 7% volume growth sustaining. Large part of margin expansion comes in the second half of this year, led by their change in product mix and deflationary trends in some of their key raw materials as well. The stock doing well, up around 4.5%. We take a short break, come back, get you more on the markets and a lot of stock-specific action on the other side.